Be Wealthy and Smart, episode 334.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about 5 reasons to finance a home purchase, and you're going to learn how to think through whether or not to finance a home. And I'm going to tell you a true story. This is because a friend of mine called me a couple of days ago. I'll call him John. He called me up. He's a very successful businessman, sold his business, and he's looking to buy a third home. And he just wants a little kind of small residence in another city. And so he said to me, should I finance my house? Well, I was kind of surprised that he was asking that question because he's a pretty savvy guy, very successful businessman. And so I wanted to share with you sort of the logic and the thinking that went through and the conversation I had with him, because you might be curious what I said or how to think that through for yourself. So the first question I asked him is, if you were to get a fixed rate mortgage, because that's the only kind I believe in right now since we're in an upward rising interest rate trend, what would the interest rate be? And he said around 3.5%. I said, wow, that's a great fixed rate. That is a very low rate historically. And, I remember when rates were a lot higher. I've certainly had interest rates in the past that were a lot higher than that. So that was the first thing we wanted to get clear, is what was the fixed interest rate that we were talking about? Because only when you know the rate can you then talk about whether it makes sense or not. So that was the first thing. And my response to him telling me the rate was around 3.5 was just that this is still a very low interest rate. Very, very cheap money, and certainly is looking good and sounding good just from hearing the rate. So the next point that I brought up is, how much is it really going to cost him? Because an interest rate is really the cost of money. It's the price of money, if you will. So 3.5% being the cost of money that you're paying the bank, well, that's the gross cost. But think about it this way. It's even less because if you itemize, it's tax deductible for the interest portion. So really, if he's able to deduct the interest, then his interest rate, or then what it's really costing him, is even less. Then the money is even cheaper. But we don't know if those deductions are still going to be allowed under the new tax reform. So I do have to have a little disclaimer that we're not really sure what the new tax reform is going to allow to be tax deductible and what isn't. The third thing is, I said to him, if rates were much higher, let's say a year from now, 2 years from now, 3 years from now, interest rates are at 6%. Would you kick yourself that you didn't lock in 3.5%? And he said, yes, I would. And I said, exactly. Because as interest rates go higher, we don't have, you certainly can pay something called points, which allow you to reduce your interest rate, but you're paying to reduce your interest rate. You're paying $1,000 per point typically to reduce your interest rate. But having a low interest rate without having to pay points, you're not going to be able to do that a year or 3 years from now when rates are higher. So this is something to think about, is if you were in the future looking back at today, would you kick yourself that you didn't take advantage of these rates? The fourth thing to look at is, what kind of opportunities are there to earn these kind of rates? The rates that you're going to pay on a mortgage, can you earn that kind of a rate? How difficult is it to earn that rate? Well, at around 3.5%, you definitely can earn dividends on stocks yielding around 3.5%. So you have opportunities to earn enough to actually cover the cost of the interest that you're paying on the loan. So when you see that there are opportunities to basically net out your cost because you could invest in something that is yielding as much as what you're paying on your loan, that doesn't always happen. And so that's a pretty special opportunity. So again, that's another yes answer for should you finance it. And then the fifth thing is, if you want to be cautious, you're thinking there could be some risk, this could be the peak of a bubble perhaps, we think prices might be coming down in the future, then perhaps what you could do is maybe not borrow the maximum. Typically, you would put down 20%, borrow 80% of the value of the home. Maybe you're more conservative. Maybe you put down 40% and only borrow 60%. And that way, if prices drop, you won't be underwater. You won't be owing more than the value of the home. You won't have negative equity or no equity in your home or owe more than what it's worth. So certainly, I can understand wanting to be cautious. I can understand wanting to be conservative. And the way to do that might be to put more cash down. So those were the things that we talked about. That was kind of the line of reasoning and line of questioning that we went through. I hope that we spurred some things in you that you might not have thought of, or gave you a different way to look at things, and maybe taught you a little bit about what are some of the ways that you look at whether to finance or not and make that decision, and to look at just the whole thought process. In the end, my friend did end up financing his house, and he's closing in 30 days. If you haven't yet subscribed to Be Wealthy and Smart, please hit the subscribe button and you'll have instant notification of all my new podcasts. And if you want to get your net worth moving in the right direction, go to lindapjones.com and get my 11 quick financial tips to boost your wealth. There are 11 quick things anyone can do to get to financial freedom faster. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.